The subsidies going away is just coming into form right now of lower prices, isn't it? They're just subsidizing it themselves, I guess, in some way. How does the industry look moving forward? Do we get more consolidation? Is the 100 sort of company count, is that going to shrink even further?
Yes, so analysts are predicting even more consolidation to happen in the coming 5 to 10 years. What they're saying is, China's EV market has been such a bubble. Now it's time that it's bursting, and essentially you're just going to see majority of the companies that sprouted up in the past decade drop off. And one of the analysts I talked to said that he can see the China autos and EV market becoming a mature, consolidated market like that in the US, with maybe just a handful of dominant players left. So like in the US, their autos market essentially just have 3 really strong legacy players, Ford, GM and Chrysler. So that could be something we see in the China market as well.
China's cutthroat EV market is squeezing out smaller players. The world's largest electric vehicle market bubble has finally burst and is going through consolidation. The biggest winners and players are already at the top, like BYD and Tesla, which have further secured their EV power in the market. The squeeze has only intensified over time, with major players strengthening their positions than smaller ones struggling to survive. The market share by unit sales for the top players rose to 60% in the first quarter of 2023 compared to 44% the same period 3 years ago. While China extended a tax break for consumers buying new energy vehicles through 2027, all signs are that the government won't continue to prop up troubled EV makers.
A lot of people were excited about this market, and we got price wars, what have you. So how do we go from something that was promising to some extent to the current situation that we're in today?
Yes, so the China autos market has actually been seeing relatively flat growth. There's been quite a weak consumer sentiment coming out from the COVID pandemic last year. So with the overall market not growing really fast, you actually have EV makers competing even more fiercely to maintain their market share. That's why we're seeing all of these price cuts and trying to get consumers buying again. And as well, with the government basically saying they're not going to prop up the EV makers that are failing. So essentially, China started a program to promote EVs to become a really strong industry about 10 years ago. And now that 10-year plan has come to an end, and we saw really generous consumer subsidies ending last year, which has also had an effect on the market, cooling it down. So now it's a pretty tough competition for these EV makers right now in China. So for existing players, we're starting to see really dominant ones emerge, especially BYD and Tesla. These top 2 players grab most of the market share in China. And the smaller ones like NIO and Li Auto, they really have to bring up new models to excite customers, as well as keep pricing attractive to try to compete against the strong players.
That's not good news for struggling players like NIO, whose sales have been tumbling. NIO announced that the government of Abu Dhabi is taking a 7% stake following a capital infusion. Another prominent EV maker, Jidao Electric Vehicles Company, sold a total of about 100,000 vehicles with a driving range of as little as 62 miles, or 100 kilometers. The micro-car maker quickly lost momentum after China ended subsidies for EVs that traveled less than 93 miles between charges in 2018.
Yeah, if this bubble really is starting to deflate, then Linda, what does this mean for EV makers that are still in the game? Who's likely to survive?
Yes, so now we're seeing a lot of these players essentially being forced to exit because they're not selling cars. So their production plants are laying idle, and cash flow is a big problem. We've seen that currently there's maybe just over 100 EV brands in the Chinese market. That's down from maybe hundreds back in 2019. So a lot of these companies essentially just went out of business once the subsidies ran dry and consumers aren't buying their cars.
The most recent casualties in the EV shakeout was WM Motor Technology Group, and the Shanghai-based EV maker is backed by tech giant Baidu. Thanks for watching. Like, share, and subscribe.